But I mean, the lower they go, the less likely they're going to fall much further. So, I mean, I think in the longer term, we tend to focus long term. We do believe energy is a growth story long term in the globe, with economic, global economies improving. And so this would be a good buying opportunity for a long term investor that has a strong stomach. I mean, basically, the reasons for the sell off are real. You've had a very strong U.S. dollar. You've had very anemic to negative global growth and anemic U.S. growth. And as a result, the demand for energy and other commodities just hasn't been there. But we see that as more of a shorter term issue than a longer one. We still think the world needs these products to grow effectively. And so, again, for a long term investor, there's value there.
I do. I think one thing that is happening, though, that if you compare the active versus passive investing, I think that if you're fundamental and can look at companies that do have sort of the fundamentals that are continuing to improve, I think you can have that strength lead to a rally. And like I said earlier, there's still strength in housing, there's still strength in cars, and the consumer's confidence is still relatively high. I know that the interest rate scenario with the Fed increasing the rates is an issue, but that is essentially already baked in, and that's almost symbolic from our point of view at this stage of the game. Well, so yes, we do think there's confidence.
I attended a conference last week, and what I heard was very encouraging. Across the board, many of the companies were talking about industry stabilization, and also that the seasonality that we normally see from the third quarter to the fourth quarter is right on plan. And while that sounds kind of mundane, this group has been really kind of choppy, starting in the summer timeframe and into the fall. So stability, I think, is good. I think visibility is improving, and valuations are still really compelling.
Which names do you like the best?
Okay, so I have three. Number one is Intel, the industry leader. Clearly, they were very positive about the PC dynamics improving, driven by Skylake and Windows 10. They reiterated data center growth of 15% for next year, which is very encouraging. And most importantly, they are continuing to invest. Scott, this company has spent $164 billion over the last 10 years on R&D and CapEx, and that is not going to change anytime soon. And that's what's really driving the overall growth of the story. And I think they have earnings power of $4 a share. Stock's still down on the year, by the way.